Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the subscription that I offer. But before I go any further, a couple quick disclosures. First off, am I trying to imply that every alert that I send out, everything that I do is perfect and creates all sorts of profits? No, nobody is perfect. Nothing is perfect. And anybody that tries to imply or give you that feeling, run the other way very, very quickly. But it does go to show why risk management is so important, why risk control and understanding all the angles of risk matter, because losses happen. That's just part of trading. But the other thing is winners also happen. So when those winners do occur, you want to make sure that you know how to have your account positioned properly so that you can benefit from those wins. And then the second disclaimer is we are going to go back a few weeks into time. Why are we going so far back into time? That's a fair question. First off, it's just simply giving the price plenty of time to play out so we can see what happened. And then second, just a matter of being fair. People, I wouldn't want to pay for something and then see what I paid for just right out there for free all of a sudden. Those people would feel ripped off, and I think they'd be justified in feeling that way. So it's just a matter of being fair and then giving the price plenty of time to play out. So what we're going to be looking at here is the weekly newsletter. So let's get to it. I almost forgot, but as is the benchmark that I think I enjoy doing, and from your feedback, I know you like it too. But just to keep things in perspective here, we're at bank rate, and you can see that right now the national average for a 1-year CD, which is a certificate of deposit, which is you could get at your bank, are up there. But let's just look at the best case scenarios around the market, and you can see that as of right now, best case as far as a CD is concerned is 2.85% for 2 years. But it's looking like this one beats it out because this is only for 1 year. So 2.8% for 1 year. Just keep that percentage in mind as we go. Before we get into this alert, a couple of quick questions that I always get. Clay, what price range do you cover? I cover all price ranges. Price I don't really care about. I care about probabilities. I care about chances of success. So that's my main focal point, not just trying to, cram a whole bunch of price range stocks. Because if you think about it, if you say, I'm only going to cover certain price range, well, if now you're going to be forced to potentially have to find something because, you told people that but in this situation, I'll alert anything from price. In fact, in last week's video, I think there was a penny stock all the way up to something that was like $200 a share. So for me, it's all about probabilities of, having success within the trade itself. So and then the second question, when are these sent out? They're sent out over the weekend. So you don't have to rush. It's not like you have to make some sort of split-second decision. Plenty of time to look things over and digest the information so that you can be prepared for the new week. First alert that was sent out, or I should say at least the first alert we're going to cover in this video, was ticker symbol MOS. And you can see up here, this was in the technical pattern category where I thought, maybe a potential double bottom here. So let's see how this one played out. So here's what the chart looked like before the weekend started to play out. So let's see how it went. Nothing, nothing, nothing. So it took a little patience and then did drop down there for an entry point. So now it becomes a question of, is there going to be some sort of, double bottom pattern, trying to consolidate out. And then right there, did not happen, started to fall below it. And then from that point, you can see things just didn't go well for it. Now, of course, this is why risk management happens. I'm not saying people are still holding. If anything, there's a good lesson, and just sometimes you got to wave the white flag and hop out. But there is one where let's just say it was a 5% loss, and I'm just making that number up. But a 5% loss would be you gave it plenty of wiggle room over $1, and it just didn't work out. So you had to get out. So right there, yeah, that was a double bottom. That I suppose I could cherry pick and say, well, technically, if you played the little bounce right there, you'd have been okay, and it would have been a profitable trade. But nah, that's silly games. I'm not going to play that. I'm just going to call this, one that didn't work out, and it happens. The next one, TRNX. So from a price range perspective, think about it. We were just looking at a $25 stock. Now we're looking at something that is down here below $1. So right here, do not chase. So warn everybody, don't just start buying the price up around here. The whole idea was let's see if it can pull back there. So let's see how this one played out. So let's see how things played out. So stop and think about, first off, that where some people could have been if they did chase, meaning, oh, wow, it's gapping down. It's time to get in right now. That's still chasing after a big move like that. Up around here, think about it, 90 cents. So there's basically a range from 90 to 95 cents that people could have potentially bought. So keep those people in mind as we see what happens. But remember, as far as, the alert was concerned, we're waiting to see things, pull back to around the 76-ish area. And right there, you can see there's a gap down. And I mean, really, I could easily make the argument, well, because in that situation, people would have seen the gap down. I could see people just saying, no, I'm going to wait and see what happens and not ever get in. But to just err on the side of caution, let's see people are like, hey, I'm getting in right now. So that's the premise. People are getting in right now, although I think that might be a little sketchy. But we'll just go with that. And you can see that, yeah, that did not, it just didn't work out. This thing just kept dropping and dropping, which, again, why risk management is so important. Yeah, it was a losing trade, but just don't let things spin out of control. And think about it. There were still people that chased and bought a pair. And what was the first thing that I said? Do not chase. So people bought a pair, and then things got very, very nasty for them. But the people that potentially got down here, just honor risk, manage risk, and analyze risk. This is why it's all about risk control, because sometimes things like this happen, and you don't want let's just say a 5% loser all of a sudden spinning into a 10, 15, 20% loser. Which was very possible for this one if you see how it continued to happen for those people that are holding and hoping. I mean, the price is literally all the way down here. For some people, even 50% below, considering they were buying up above $1. But yeah, another one that just wasn't a winner. So there's two losers, and let's just say 5% loss. So right now we're at 10% loss. Another part of the newsletter is actually where I send out for specific within the ClayTrader University, the Trading Freedom Pathway program that I offer. There's ClayTrader University, and then within ClayTrader University, there's different classes. And I just bring that up because part of the newsletter is for certain classes, there are tickers for that class. And there's just the tickers because you're going through that class, really all you need is a ticker symbol because you'll know what to do from there. It's kind of like we're in a big pond, and I say, hey, there may be some fish over there. And that's all I need to tell you because you're in the class, you know how to go over there. You know how to bait the hook. You know how to cast the the line and all that sort of stuff. You know how to catch a fish. I'm just saying there might be some fish over there. So that's kind of what the idea behind these is, just the ticker symbol, because really that's all the person would need. But first one we're going to look at here is COP, and we're looking at shorting. Real quick, if you're new, what does shorting mean? That just means making money when prices go down. It sounds bizarre, but yes, in the market you can make money when prices go down. So that's what shorting is, going short. Any of those kind of statements around that area. So let's see how a couple of these ones did by making money when prices go down. So here's what the chart looked like at the time of the alert. Remember, we want to see prices going down. That is a good thing. So went down there a little bit, tried to bounce back up, and then that's where the big rollover move happened, and yikes. Yikes some more, but remember, yikes in a good way for those people that have gone short. And then check that out. As of right now, down 11.6%, which for something that started off up in the $60 range, that's a pretty big drop right there. But I'm not saying anybody's played it perfectly so far. Who knows? Maybe people are still making money because it's still at its lows. But let's just say people, for whatever reason, screwed up half the trade. Well, there you go. You got it right around 5%. So 5% you've made now, and those other ones. So that wipes away one of those other controlled losses. So remember, we're assuming those other ones were controlled for right around 5%. So right there, you screwed up half this trade, but hey, you know what? At least you got 5% back. The next one we're going to look at here is OSTK. Same premise. We want to see prices going down because that means we're making money. So there's a chart going into the weekend. And you can see right there, did not wait very long. Right out the gates, price starts to go down. Starts to go down some more. Starts to go down even more. Even more and more and more. So far, that has gone down 41.7% since that alert. 41.7%. But again, you screwed up half the trade. Okay, well, that puts you at 20%. So now you not only have you wiped away both of those controlled, being disciplined losing trades, you're well in the green because you already had 5% from the first one we just, the COP, and now this one, which you only got, we'll say 20% out of. There you go. That's why risk management is so very, very important, because really it only takes one. It only takes one to wipe away losses and then put you in the green. And then the final one I'm going to cover, it goes back to a theme from last week that I talked about. We're about the power of general knowledge, the power of not being a puppet, the power of not needing to be a blind sheep where you just follow somebody and say, hey, tell me every little thing of what to do. Because when there's power in knowledge, and I get that, that's just kind of a sound bite. But here I want to describe show what I mean with LCI. And for those of you that are students, you should know exactly what I'm talking about. You should know exactly what I see. In fact, this does such a good example that I very well may do it on a future live webinar that I do on Tuesday nights for ClayTrader University students. But I don't know if I'm going to do it yet, but my point is, if you go back and watch last week's video, I talk about general knowledge and how powerful that is, and here we have another good example of it. So there's what the chart looked like going into the weekend. And like I said, I'm not going to break down the whole setup and how it works out and all that. I mean, that's where the class comes into play. But there was just nothing that would have occurred that would have made you want to get in. I'll just put it like that. But remember, general knowledge. And then there's another dynamic that starts to play out here. Maybe you see it. Now, for you students, you should see what's going on right here. So there is something because of general knowledge. If you had general knowledge, if you knew how to read a chart, if you knew how to put together a trade plan, there's stuff occurring right now where you're like, oh, okay, yeah, I could see doing something like that. And there, all of a sudden, look at that. Boom, boom. And it definitely rolled back over. So 28.6%. So there's another great lesson there. Just because you're in something that really starts to go up fast like it did here, that does not mean that it's going to the moon, okay? Sometimes it can turn around just as fast. So by no means am I implying anybody got 28.6%. Again, let's say that you totally screwed things up and you got, I don't know, let's say you screwed up 75% of the trade. That's 7% you still got on it. Again, I'm assuming the worst case here, you screwed up 75% of the trade, so you only got 7%. This is all just a cherry on top now at this point, because the other one already wiped away all those losses. So now you just added a 7% for, I don't know, what was that? About a couple weeks worth of time. And what was that one interest rate? 2.8% for 1 year. Yeah, I'll still take 7% for 2 weeks, for 3, let's just call it a month. I'll take 7% for a month compared to 2.8% for a year. There's power in knowledge. To finish things up here, if you are interested in getting these alerts and just learning in general, then this is where you can go, claytrader.com/team. And these are all the other things you get. So we just focused on the newsletter. There is also a live chat room that comes with it, and there's a mobile app and all that. So it's not like a situation where you got to stay chained to your computer or anything like that. You can stay in touch with everybody no matter where you are. And then this is always a favorite. There's no pumping, there's no bashing, there's no drama. So if you're kind of sick of that stuff on social media and just want a clear and clutter-free environment, then you would enjoy this, because it's broken down in a way where we keep the clutter out of the way so that you can just have a great idea of where the alerts and such are. But like I said, part of this is that newsletter, which we just covered. So sign up, and I'll see you on the inside.